Dinar Shift, welcome to the channel. Today we delve into a development from the Central Bank of Iraq that marks a truly historical turning point for the Iraqi dinar. This information moves far beyond the realm of common speculation or unverified chatter that often dominates discussions within the financial community. We are addressing verified, official news straight out of Baghdad, confirming a structural monetary change that signals a profound shift in the currency's status. For those who have been observing the dinar's journey, this is a pivotal moment, demanding close attention. The gravity of this update cannot be overstated, as it suggests the long-anticipated transition is progressing through concrete institutional stages. We are witnessing the unfolding of a calculated strategy, demonstrating Iraq's firm commitment to aligning its national currency with international financial standards. The Central Bank of Iraq has formally announced and activated a new system known as the Contract Exchange Rate Framework. This is a highly operational mechanism now fully in effect, representing far more than a simple policy statement or a minor internal adjustment to accounting procedures. The implementation of this framework is a material action taken by the Iraqi authorities, signaling a dedicated path toward a comprehensive revaluation of the dinar. By putting this system into practice, Iraq is establishing a dual-rate environment, the public exchange rate, which remains visible for everyday market transactions, and this new, distinct contract rate, reserved for specific high-level financial engagements. This contract rate is the valuation used for official government financial agreements, particularly those involving major international projects and high-volume transactions, such as oil settlements. The fact that this system is live and functioning is monumental because it elevates the dinar's role within major global commerce, moving it from a purely domestic currency to a key component in international deals. It's an effective mechanism for Iraq to test the strength and viability of a higher valuation in real-world controlled scenarios, ensuring that the currency's transition is carefully managed rather than abrupt. This strategic deployment serves as a clear indication that Iraq is laying the foundation for an eventual broader adjustment to the public exchange rate. To fully grasp the magnitude of this shift, one must understand the function of a contract rate. It is a predetermined, agreed-upon value assigned to the dinar for specific, legally binding contracts, primarily between the Iraqi government and foreign entities. Crucially, this rate is not yet accessible to the public for general exchange. Instead, it acts as an internal, officially recognized valuation, reflecting what the country's central financial authority deems to be the currency's appropriate worth in serious international transactions. For instance, when the state finalizes a major oil shipment or a contract for infrastructure development with a foreign partner, the dinar's value within that agreement is benchmarked against this verified contract rate, rather than the lower publicly advertised rate. This sophisticated method allows Iraq to gradually introduce its national currency into the upper echelons of global trade. By utilizing the contract rate for significant dealings, the central bank can monitor the dinar's performance and stability when transacting, with a valuation closer to its intended higher public rate. This operational testing phase is crucial because it ensures that when the final public revaluation is initiated, the necessary infrastructure and practical banking channels have been thoroughly vetted and are ready to handle the increased volume and value of international trade settlements. It is an act of meticulous financial engineering designed to minimize disruption during a major economic transition. Evidence of this system's active deployment can be found in various sectors, most notably in energy and massive reconstruction projects. Reports indicate the contract rate has already been applied to several significant agreements, including those related to the expansion of vital oil export infrastructure, particularly around the economic hub of Basra. The deliberate use of this higher internally controlled rate for such high-stakes transactions demonstrates the central bank's operational confidence. It showcases a readiness and internal control structure capable of managing a national currency with a substantially increased valuation, confirming that this is no longer a theoretical exercise but a functional reality. The implementation of such a structured framework strongly suggests that the next phase involves a step-by-step public adjustment of the exchange rate. The objective is to bring the dinar's publicly available value into closer alignment with regional currency standards and, ultimately, position it competitively within global trading systems. This measured approach contrasts sharply with any notion of a sudden, chaotic change, reinforcing the idea that the Iraqi financial authorities are prioritizing long-term stability and controlled integration. The focus is on a sustainable increase in value, supported by verified operational systems. A particularly revealing element of this announcement is the reported participation of international clearing banks in the review process of these contracts. Major global financial institutions are not merely observing from a distance, they are actively monitoring these contract rate transactions. This deep-seated involvement is essential for verifying that global payment systems are fully prepared to recognize and process transactions using the new contract rate valuation. The coordination ensures that the technical, legal, and compliance infrastructure necessary for international settlements is synchronized across the world's banking network well before a public rate change occurs. This collaborative effort signifies that Iraq is not acting in financial isolation. By working hand-in-hand with top-tier international banks, the country is guaranteeing a smooth, compliant integration of the dinar into the global financial ecosystem. This unprecedented level of preparation and coordination is a truly historic development for the currency, securing its recognition and acceptance on a global scale. It is a necessary step that validates the entire preparatory process and adds a layer of global institutional credibility to the dinar's pending revaluation. Another important piece of the currency reform puzzle is the recent issuance of smaller denomination notes, including the new 50 dinar bill. While seemingly a minor administrative detail on the surface, this move takes on a critical strategic meaning when viewed alongside the contract rate activation. Smaller denominations are a prerequisite for a smooth revaluation. When a currency's value increases significantly, the existing high-value notes become impractical for everyday small-scale transactions. By preemptively circulating these smaller notes, the central bank is preparing the domestic market for the higher public value, ensuring that citizens and businesses have accessible currency units for daily commerce. This careful, foresightful planning underscores the central bank's comprehensive strategy, which addresses both the major macroeconomic requirements of international trade and the practical day-to-day needs of the national population. It illustrates a dual focus on achieving long-term financial stability while simultaneously managing the practical circulation, demands that accompany a significant currency value adjustment. The release of these notes is a visible sign of the infrastructure being finalized for public rollout. For those holding the Iraqi dinar, the contract rate serves a crucial informative purpose, even if it cannot be used for immediate public exchange. It functions as a powerful internal benchmark and a verifiable forecast of the revaluation process that is actively underway. The new system allows the central bank to conduct a trial run of its valuation mechanisms in a controlled environment, ensuring flawless operation across domestic and international financial channels. It is a strong, tangible signal that the groundwork for a broader public exchange rate adjustment is not only being laid, but is already being tested and confirmed. Furthermore, global banking networks are quietly responding to this verified progress. Tier 1 banks in the United States, including major institutions like Bank of America, Chase, and Wells Fargo, are reportedly engaged in internal system updates to accommodate the contract rate verification protocols. While this does not authorize immediate public exchange at a higher rate, it is a significant indicator that major financial institutions worldwide are preparing their infrastructure for an imminent widespread currency value transition. This preparatory alignment across the international financial system is a vital part of the dinar's journey toward global recognition. The collaborative relationship between the Central Bank of Iraq and its international counterparts extends beyond mere contract rates. It encompasses stringent compliance measures. This includes the implementation of advanced anti-money laundering (AML) protocols, sophisticated digital transaction tracking systems, and full adherence to international banking standards. These foundational regulatory changes are indispensable for building global trust and confidence in the dinar as a reliable trading currency. The establishment of this robust digital and regulatory framework demonstrates Iraq's commitment to secure, gradual integration into the world's financial machinery. Analyzing Iraq's economic landscape provides strategic context for the timing of this contract rate framework. The nation has successfully stabilized its key economic pillars, notably through sustained oil production, a significant buildup of foreign currency reserves, and ongoing efforts to combat corruption within the financial sector. These steps have created the necessary fiscal stability for currency reform. By rolling out the contract rate system now, Iraq is projecting confidence in its ability to not only sustain a stronger currency but also to effectively manage its international alignment and responsibilities as a key participant in the global economy. These comprehensive reforms, coupled with the methodical preparation evidenced by the contract rate and international banking coordination, strongly suggests that the central bank is fully prepared to proceed with a broader public revaluation when the strategic moment is deemed optimal. The entire framework is a testament to a cautious yet decisive move towards a more financially robust and internationally respected currency. The readiness demonstrated at the institutional level is a powerful signal of the impending shift. The introduction of the contract rate is also intrinsically linked to Iraq's larger aspiration for greater economic sovereignty. By prioritizing the dinar through this internal valuation system for all critical contracts, Iraq is actively decreasing its historic dependence on foreign currencies, particularly the US dollar, for major domestic and international transactions. This strategic move strengthens the national currency's functional role and influence within its own borders and on the world stage. This is not solely a domestic economic maneuver, it is a strategic positioning of Iraq as a stable, dependable participant in the global financial system. A successfully revalued dinar, backed by tested systems and international compliance, would empower Iraq to engage in world trade with a currency that truly reflects its economic strength and stability. This, in turn, would significantly boost confidence among global investors and its international trading partners. For dinar holders, the most crucial instruction during this time is to maintain a perspective of informed patience. The verification and activation of the contract rate signify that the preparatory phase is nearing its end, with systems being tested and agreements being verified through major international financial institutions. However, it does not imply that immediate public exchange is available. The public rollout will be a carefully controlled event, initiated by official announcements and executed through verified, legitimate exchange mechanisms. This careful, phased approach is designed to mitigate risk and ensure that the revaluation, when it is finally unveiled to the public, is both sustainable and secure. The potential implications for holders are considerable, as a verified contract rate significantly higher than the current market rate provides, a verifiable signal of a substantial potential increase in the dinar's public value. Protecting the physical currency and avoiding all unverified exchange platforms remains paramount during this critical phase. The utilization of a dual rate system, the existing public rate and the new, higher contract rate, is a methodology often employed by countries undergoing major currency reform. This parallel operation allows Iraq to systematically adjust its internal and external financial mechanisms without causing sudden market shock or disruption. It ensures seamless integration with pre-existing international trade agreements and banking operations, demonstrating a strategic and cautious approach that balances the need for stability with the clear signal of an imminent, broader revaluation. The strategic move to issue smaller denominations, exemplified by the 50 dinar note, is more than a logistical necessity. It is a calculated feature of the overall revaluation framework. It is a preemptive measure to guarantee the continuity of everyday economic life as the currency's value rises. By ensuring that citizens and local businesses can easily adapt to the change, the central bank showcases a comprehensive, phased implementation strategy that meticulously addresses every aspect of the currency's transition, from high-level oil deals to daily consumer purchases. The active involvement and oversight of international banks are indispensable to this entire process. Their operational support and verification of the new contract rate framework are what lend global credibility and scale to the system. This global partnership validates the dinar's strength and reliability in international financial markets. It provides assurance that once the public revaluation is completed, the currency will be fully recognized, trusted, and functional within the world's interconnected trading infrastructure. The current phase is essentially the final dress rehearsal for the full-scale public revaluation. Every protocol, contract, and banking system is undergoing rigorous testing and verification. Only upon the successful completion of this phase will the public exchange mechanisms be ready to launch in a secure and organized fashion. For dinar holders, this period represents the critical final stretch, where vigilance and patience are essential as the established infrastructure is confirmed as fully operational. It is equally important to situate Iraq's economic stability and the new contract rate within the context of a broader, long-term strategy aimed at achieving lasting financial independence. By implementing these rigorous measures now, Iraq is not just strengthening its currency for immediate transactions, it is building a foundation of resilience against future economic uncertainties. This decisive action by the central bank signals confidence and demonstrates a controlled approach to shaping the currency's future trajectory. In summary, the official activation of the Iraqi Dinar contract rate system is truly a landmark development. This verified, operational framework is an unambiguous signal of Iraq's methodical march toward a fully recognized and broader currency revaluation. The convergence of smaller denominations, digital tracking, international banking support, and meticulous internal planning confirms this as a serious, coordinated, and well-executed financial transition.